Well, as anticipated, investors went crazy over the public offering of Snap Inc. Those are the makers of Snapchat, but you already knew that. On day one of the offering, shares were up over 44%, and by the second day, they were up over another 10%. Amazing start to Snap Inc. So we did another video of the details of the IPO for Snap Inc. I'll put a link in the description below if you're interested. Despite all the issues that I had personally for Snap Inc., investors went nuts. At least for now, they were tripping all over themselves to buy shares of this company. All right, so here's how the IPO really works and what really happened behind the scenes. Snapchat wanted to go public, so they hired a company that does this for a living. In this case, it was Goldman Sachs, and said, hey, we want to go public, so help us out. Now, Goldman Sachs says, all right, cool, how much do you want to raise? And from there, they take a look at, from their experience, what the market can handle, how many shares they put out to the public, and see if it's even really possible. Here's the cool part. Let's say the number was 50 million shares that Snap Inc. wanted to put out there. That's not the number, but let's just say it was 50 million. Well, Goldman Sachs will promise ahead of time that they will sell a portion of those shares. It's usually quite a bit. So in this case, let's say Goldman Sachs said, you want to sell 50 million shares to the public? Let us have the job. Let us be the people responsible for doing that. And we'll promise we'll sell half of them before we go public. Now, Goldman Sachs is on the hook for the half of those shares or whatever it is that they promise. So they get on the phone, they start calling other brokers, they call all their rich friends. Maybe you got a call saying, hey, you want to invest in Snap Inc.? I doubt it, but they call anybody that they know that might be willing to invest and try to get rid of all of those shares that they offer. Now, sometimes when you buy shares before the IPO, anyone that's willing to take that risk, sometimes they'll get a discount. So Snap initially had the opportunity to price their shares between $14 and $16. That's what they thought they were going to do. So let's say Goldman Sachs is calling all their people and saying, hey, you want to buy shares? I understand you're taking a little bit of a risk. So maybe they got a discount of 50 cents. Maybe they got to buy the shares for $13.50. I don't know the exact numbers. I don't think anybody really does. But let's say they got a discount. So what do you think happens if Goldman Sachs is able to sell most of the shares before the IPO, before we even go to the public? Well, supply is a lot less than anticipated, and demand, if Goldman Sachs does their job well, should be at its highest point ever. People should just be so excited about this IPO. Well, right before they launch and go public, they gauge demand one more time just to see if they maybe want to up their price. And in fact, they did with Snap Inc. They were going to be between 14 and 16, and right before the offering, they said, well, let's just see. Are people interested? It turns out they were, so they said, you know what, we're gonna go up to 17 now. We thought 14 to 16, but now we changed our mind and we're selling for 17. Now, Snap did something actually pretty interesting here, and I give them a little bit of credit for this. They went and saw, that the demand was so high. It was 10 times higher than expected. They could have raised the price to 19 if they wanted to, but they said, you know what, let's just leave it at 17. We know we're gonna sell out, we're gonna do great, but let's leave it at 17 in hopes of attracting the mutual fund investors rather than attracting all the hedge fund investors. Why do they do that? Well, mutual fund investors tend to hold forever, right? If you buy a mutual fund, the products that are inside of that mutual fund tend to never change. They're always going to be the same for the long term. Whereas hedge funds will speculate more. They'll buy shares in hopes of selling them a year later or whatever for a lot more and make their profit much faster. Well, that doesn't benefit Snap Inc. They want long-term investors in their company. Okay, let's go back to the people that bought before the IPO though. Well, shares were so in demand that the stock actually opened at $24. So if you bought ahead of time, even if you didn't get a discount for taking the risk early, let's say you paid $14 for those shares, you were very happy on the first day of the offering because it was at $24. That's where it started. Now, don't you think that those people would want to sell as soon as the stock opened? Well, here's the deal. If you bought shares, and usually if you buy shares in any IPO before it goes to the public market, you're forced to hold on to it. Now, as for the Snapchat shares, anyone who bought it before the IPO, they actually have to hold it for 6 months. They can't do anything for 6 months. So they may have been excited on the first day and the second day to see 70% worth of gains in 2 days, but there's nothing they could do about it. See, the real action comes 6 months from now. You can get all excited and buy Snapchat all you want, but the real activity for this stock is gonna start 6 months from last Thursday. Remember, most of the shares were sold before the IPO. What do you think those investors are gonna do 6 months from now when they're allowed to sell their shares? Maybe the stock price is at 40. Or what if it was at 40 and it came all the way down to 10? Or what if it was at 40, came down to 20, bounced to 30, and then came down to 10? Do you think people are going to be more willing to buy, or are they going to want to sell all the shares that they bought? I don't know, right? There's a lot of unknowns here, because if the stock's even at 40, that's still a huge gain. So 6 months from now, will people be wanting to take their gain, or are they going to hold for 80 or see whatever happens? I don't know where the stock's going to go. On the other end of it, if the stock is falling, do you think they're going to jump and run out and sell their shares, or will they wait it out because they've got a better price than everybody? That's where the real fun happens here. So between now and 6 months from now, stock can do whatever it wants. It really doesn't matter. The real activity comes when all those shares go on the market. It's for this reason that I usually never invest in IPOs. They're especially probably, not suitable for retirement accounts. Let's wait till the dust settles and then go from there. Speaking of retirement accounts, that's what we do here actually. If you need help managing your retirement accounts, or just don't like whoever you're working with now, we'd love to be the people that you like working with. So feel free to check us out on our website, jazzwealth.com. There's tons of other great videos there. If you'd like to talk with me directly, I'm always available. You can send me an email, leave a comment, or contact me directly anytime at